All right, guys. Sheila said that there's so many. Oh, by the way, I have Invisalign, so I'm going to be talking weird. I hate this. And it hurts.
Stop it. It's fun.
I'm being a baby. I want to quit. But Sheila was talking about how the amount of resources that we have now. If you look at a small dose production, what does he say? I keep watching Jen's video on how to do a kitchen table appointment, how to do a qualified appointment, how to do a Zoom appointment. He's been closing that way, right? By watching the video over and over again. And then Maurice, who's on Zoom right now, he called me. He said, I have a friend of mine, and she has a Transamerica policy with living benefits. And how do I overcome that? And so I made Sheila, anytime someone asks me a question, I make the next Saturday training is usually geared around that, right? So the person can get a really comprehensive answer to whatever it is that they're wondering, and then it becomes recorded as well. So she did that training a couple weeks ago, then he's been watching that, and she sent him the policies. So he goes into this appointment and he's like super prepared. And I was this close to being like, just let the client watch Sheila's video. Because why not? Who cares, right? What does it matter? All they're looking for is the right information. They're looking for the truth. And then, you can help them make the right decision. But as far as the cost, okay, we are not the cheapest company. Let's talk about a couple of the reasons why. The ultimate truth of why our rates are a little bit higher is because of this. Our clientele is predominantly what, Sheila, if you had to label us?
Working class.
Working class, middle class, right?
Lower income.
It's not predominantly lower income, but that is a good chunk of our clients, right? And so it's just the way that it works, man. Because of that, who we're willing to help, who we help, the neighborhoods that we're in, the people that we insure, our mortality rates are a little bit higher than other insurance companies. You guys know what that means? Yeah. It means our clients are more likely to pass away. So 1 million clients in Primerica, there's a higher mortality rate than 1 million clients in some other insurance company. So that is the reality. It's not because what they say, oh, don't buy from them because they're paying 6 levels of people or whatever, and that's why it's higher. It has nothing to do with that. I'll figure out how to make a lot of money on it, if the average sale was only 50 versus the 80 or 100 that it is, right? So that's the reality of the situation. But why don't I ever feel bad about it? Why doesn't Sheila feel bad about it? Because at the end of the day, no one's doing what we're doing, right? It's when, and this is like it's a cliche in sales, not in your life, you don't always go for the cheapest thing. You don't stay at the cheapest hotel. You don't buy the cheapest car. You don't buy the cheapest clothes, right? A lot of times, especially when you start to make money, you want to pay for the experience, right? So when I was younger and I would travel, when I would rent a car, there was no other car. I would go for the economy car, right? Or the compact car, I'm sorry, the compact car. So whatever the smallest, cheapest car was from any rental car company, that's the one that I was going to get. I never dawned on me to get a nicer car. Like, who cares? You're renting a car, right? But then you land in Hawaii and you have to wait for a bus because your rental car company is not in the terminal, right? So you have to wait for a bus, then the bus takes you to this other place where the rental car company is. Everybody else figured out that this car is half the cost of the other one. So now I'm in Hawaii, but I'm in a 2-hour line waiting for this random car company to give me my car, and then it's an old car, it's not as great of a car. If you ever rent from Hertz or Enterprise, their rates are higher, but look at the customer service. No one's ever in their lines, right? And then if you have a little bit of status, you just go right to the counter, and they're like, oh, your car is already ready. Just walk to this space, the keys are in there, and drive away. And you're on the beach, right? And before, I was going to be in line for 3 hours. I'll pay the $40, $50 extra for that experience. When people talk about flying first class, oh, I don't need a bigger seat. It's not just the seat. It's not just the seat. It's the experience. Depending on where you're going, you get the business lounge, right? If you're in a connection, you get to go in the lounge. You're not sitting with the crowd. The experience during the flight. Sometimes they give you food. If you drink, they're going to give you free drinks and people like that, right? Yes, the seat is better, but there's more options. You get to be on the plane first. And that means that you get to get off first. And a lot of people don't know this. A lot of times your bag will come out first. Again, sometimes I'm thinking in my head, I'm like, I was just on the plane 7 minutes ago. Now I'm in my Uber. There's people that are probably still getting off the plane. That's the experience. So when people buy from us, if you are a good agent, they pay for the experience. Here's the experience that my clients get. I could be on the beach. I could be wherever. They text me, I'm texting back right away. They email me, I'm emailing back right away. You guys know I pretty much do that with you guys. I do the same thing with my clients. I don't, believe it or not, people in other financial services companies, they have business hours. I know them. They're not going to answer their phone after 5. I know superstar loan officers. They're not taking calls after 5 o'clock. They're not taking calls on the weekend. Their voicemail says, I'm on vacation. You know what? At some point, you will earn that right, and maybe I'll become that way too. But right now, the experience that my clients get, I'm always there for them. I have messed up before. Sometimes my products underperform. Sometimes my products come out to be a little more expensive. But the one thing that why they never leave me is because they're never going to get that experience from anybody else. And they know that because there's no other business where they're getting that kind of experience. Right? See, I'm a good business owner to my customers. I'm a good agent to my clients. But I'm also a customer in many scenarios as well. And it's very difficult to find good customer service, isn't it, Sheila? It's like, dude, I'm giving you the easiest sale in the world. You don't even follow up with me. You don't even call back. You haven't returned my email. This is how the world. So when people come to Primerica and then because we're hungry and we care and we didn't just get hired to do sales, right? There's a bigger purpose here. They feel that and they stick with that. When people call us for a death claim and they say, this just happened, whatever. You called me the other day with a death claim and I said, tell her we're going to make it as painless as possible, that we're going to do everything for them. You're going to call the company and report the claim. When the paperwork comes, you are going to help them do it. The check is going to come to you. You are going to hand deliver it. Chandel, have you talked about this already? She had a death claim. What holiday was that? Memorial Day? Memorial Day weekend. There was, remember I sent you that article? That was a car crash, a head-on collision, Memorial Day weekend. Shaq, it was just kids in there. It wasn't her client. It was her client's son. It was her client's son who the mom had insured the son. She was paying his premium. Got a little $250 policy on him. Who would have, unbelievable that policy would pay out. And the mom has to now deal with this. But you know what? He had 3 kids. And I don't know what the story is, why the mom is paying for a policy when he has 3 kids, something. But you know what? Someone protected those kids. Grandma protected the kids. There's an article. It was on 95, right? In Dumfries or something like that. 2 girls in one car.
I got him and a girl.
Him and a girl, and 1 girl in the other car. All 3 passed away. This is our client. How much was that premium on his policy? Yeah, $40. What other companies out there? Hey, let me also sit down with your kids. Let me do this. Let me do that. It's crazy, man. So what experience do you want, right? Do you want to call someone's cell phone number? Do you want to call an 800 number? Do you want hand delivery or do you want a check to come in the mail? And the biggest thing is this. Fine, the experience has been great. She's going to get the check. But what was the purpose of the money? To just get it or to be smart with it? Is this person a financial expert? No, she is. Here's how we can save for the 3 kids' college. Here's how we can put money in an account and you can start withdrawing and it can last forever. These are the things that we do. So if you're going to nickel and dime me over, 12 bucks a month, good luck. Good luck. Can you go to the other email that I sent? I want to show you guys this. I don't know if we're going to have, I will get to this maybe, but I want to go over this letter that I sent out to my clients. So, Shaq, this is why I need to get my CRM started, because I'm manually sending out this letter, right? So for example, I see Eunice is watching right now. Eunice is my client. She didn't get this, but her husband did. This is the stupidity in not having a CRM. This is why I need to get all my clients in there so I can push a button and all my securities clients get this. Look, the topic today is the stock market. People's investments, people's retirement. And, when I get the urge to update my clients, it's when, I'm on financial stuff. In the financial world, something's going on every day. It's just not relevant to the average person, right? None of you, probably not me either. But what happens is when the stock market gets to a certain point, then it starts leaking into the mainstream media. And now the mainstream media is reporting crash, 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 down, 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 recession, recession, recession. And what I've learned intuitively is that this is when people need to hear from you. And they don't need to hear from you as a response to them reaching out. You need to be preemptive and let them know, I'm on top of it. I know what's going on. I'm reading what you're reading. I'm going through what you're going through, right? And so it's times like this that I send these things out so people know that I'm not hiding at the worst times. This is another crazy thing. When I get assets from clients and they're with another advisor, they tell me, they're like, this person just wouldn't answer my calls when the market was down, when I was scared. It's unbelievable, right? But it is tough, especially when you're managing like a decent sized book of business. It is tough, man. You're watching people. I have a guy that invested, just being honest with you, November was the peak of the market. He put in 408,000, and right now it's at like 280. It's tough. It's freaking Chris, man. Shaq gave me this referral. It's been nothing but a nightmare. But it's tough. It's tough. But I got to do my job. I can't control the market. But what I can do is I can help manage client behavior. At the end of the day, that's what you start to realize, that there's not some amazing strategy out there. There's not some amazing software. There's not an algorithm, right? The market is going to do what the market is going to do, and the market is going to perform well over time. All you can do is help the client manage their behavior through these ups and downs. Through the ups, you don't want them to get too aggressive or too arrogant, and at the bottoms, you don't want them to get too scared, right? Write this down. In investing, temperament is a superpower. In investing, temperament is a superpower. I got a bunch of responses from this email, and one of the clients was like, oh, I'm so glad that I have you looking over my stuff. And, my brother-in-law told me he just cashed out everything, 700,000. And I'm like, wow, it's like literally at the lowest point, you were probably at $1 million. Now, you realized a loss of 300,000. Always remember, when your account fluctuates, it's just fluctuating. It can come back. Once you cash out, you realized your home, as an example from another market, right? Your home went from $1 million to 700 and you sold at 700. That's it. It's not your home anymore, right? Not smart. So we are here to help talk people through this, because the people in the cubicles next to them, their coworkers, their friends, obviously Facebook, people are doing all kinds of crazy things, the masses, right? But you got to do the opposite a lot of times. So let me read this to you. Dear value client, I want to reach out to you today regarding the recent and persistent downturn in the stock market. For us, right, I'm with them. Not for you, For us, I'm with them. I'm doing what they're doing. I'm going through, right? There's something, that's why I do that. For us, long-term investors, it never makes sense to monitor our accounts or the market on a day-to-day basis. We are not day traders looking to make money every day. For that reason, I have refrained from sending frequent updates and creating more stress than is needed. So I'm not sending updates every month or every week because they're not looking at it that often, and I don't want to be reminding them about how bad things are right now because it's a tough time, right? But based on where the market is today and for the year, I felt it was necessary, I feel it's necessary to address your potential concerns. To make it an easy read, I'm just going to do some bullet points, right? So why is the media reporting this as significant? I'm not just telling you what I told them, I'm teaching you guys too, in case you get these questions or you have your own accounts, right? Why is the media reporting today as significant? Because we're officially in bear market territory. So when we were at minus 19, when the S&P 500, which is the U.S. economy, the U.S. stock, like U.S. stocks, when we were at 18, 19, everyone knew the market was down, but they were waiting until it just went down 1% more because they call a minus 20% a bear market. That means that we are in an official downturn, but it's only 1% lower than it was for the past several weeks. The media will try to portray this occurrence as proof that everything is getting worse and worse, because that's the media's job, right? They're going to say inflation is this and the war is, and it's true, but the media loves to just make everybody upset in one way or another, right? Even if whatever media you subscribe to, right or left, they're pissing you off either way, right? Because the right is saying be mad at the left is saying be mad at the right. Either way, it's making you mad, which is why I don't watch that stuff. But here's the thing. So the media is saying it's getting worse and worse. From a professional standpoint, right, the way I look at it, we view this very differently. We know it must get worse to eventually get better. So just so you guys understand, what I'm trying to tell the client and what I'm telling you is that there's a lot of money that what we call on the sidelines. Maybe you have right now, Rod, an extra 10 grand and you're kind of like, I don't know if I'm going to invest here. And then institutions and hedge funds and private equity, right? And family offices and very wealthy individuals. People have a lot of cash on hand. And we know this because the banks report it. They give out that data. And they say, hey, this is how many trillions are in cash right now. So in order for that money to get back into the market, people look for total surrender. They look for a complete washout. They want to see the housing market start to dip. They want to see the stock market go below 20, between 20 and 30%. They want the sentiment in America to be the worst of the worst. That's when they know to get in. So whereas the media is saying, oh my God, it's getting worse and worse and worse. And they have all these, right? They show people the pictures that they show. If you look at it, it's like the guy like this and the New York Stock Exchange. It's the same picture every time, right? People looking at their computer like, right? And it's just provoking so much fear. At the end of the day, as a professional, I know that all investors are waiting for is until it gets bad enough, because eventually that's what's going to get it to swing back up. So they look at these different metrics, right? They want to know, hey, more than 90% of stocks went down in a day, or there's what they call indiscriminate selling. Even companies that are doing well are getting sold. They want to see these different things. So in a sense, when things get worse, that's kind of a good thing because we know that they're going to get better soon. Many institutional investors look for large washout days as well as consecutive market drops before they start investing in the market again. In summary, we needed to go lower to get back up, right? Because at minus 10, at minus 12, it's not compelling enough for the people that have the cash to invest. And when they invest, that's what swings the market back up. So why is this happening? To combat inflation, the Federal Reserve is raising rates. Money was too cheap. That allowed businesses and people to borrow money at large sums and then put it towards whatever. People were getting first, second, third home. People are buying. You couldn't find a boat. You couldn't find, you couldn't get a Lambo, right? You couldn't get a Bentley. You can't because people have too much money in a sense. They gave money through the PPP. You guys have heard me talk about this, right? They just put too much money in the system. In a higher rate environment, the market reprices all stocks, especially those without strong earnings. So when the market, when there was tons of money, someone would say, hey, I'll invest in this company Zoom, and even though it's not making a lot of money, I'll wait for it to make money because it costs me such little money to give Zoom, the stock, right, money. I can wait till way long in the future. But when rates go up and it costs me money, I'm not going to put money in a company like Zoom. And if I do, I want those earnings quicker, which means that I have to drop the price. We have to discount the price of stocks when we get into higher rates. This process has been taking place for about 6 months. So we're getting close to a point to where companies are starting to look cheap. Always remember, the market goes down. Why? Because when it's high and the macroeconomics, right? When things change from a macro standpoint, they say, nah, you know what? With this current environment, the stocks are too expensive. We need to sell them so they come down. But eventually when it comes down enough, then it becomes cheap again. And this is the boom bust cycle in the market. Does that make sense? So when interest rates are down, stocks, it was okay to pay that much for stocks. Now that they're up, now they're too expensive. Inflation affects the stock market too. So we know how inflation affects us in our daily lives. I was sending a couple people a picture. I don't know why I joined in. I shouldn't be doing this, but like I sent Shaq a picture and I was like, dude, this guy just, he was on the other side of the pump and he was like, he cursed and then he drove away. And I was like, oh, I know he paid a lot. So I came around and looked and he paid $200 for that one tank.
Oh.
He had a not like some crazy, like humongous van. It was just a pickup truck. But it was $200. Right? So we know how it affects our daily lives. Okay, everything is up. Everything is up. Food is up. You know, services are up. Flights are up. Hotels are up. Everything is up. But from a stock market standpoint, inflation decreases corporate earnings, reducing their bottom line. So for companies, you know, for them to bring something over from China to get a shipping container, the cost to hire someone now, wages are very high because people are like, I don't want to be underpaid. You have to overpay me if you want me to stay at this job, even at the lowest level in labor, right? So companies make less money, lower earnings means a lower stock price. But this isn't forever. Inflation will soon moderate. Inflation, so the Fed raises rates to discourage you from buying a house. They want to make it hard for you to buy a house. They want to make it hard for you to buy a car. They want to make it hard for you to invest in the stock market because eventually what? Less money is going at goods, which now creates more supply, prices come down. Before, we had too much money going at too few goods. That's what was raising prices. There was bidding wars for everything, right? In the meantime, mutual fund managers, which is what we put people in this scenario, will look for companies with purchasing power, companies that can raise prices and keep up the profit margins. If you look at Chipotle, Chipotle has purchasing power, right? Who goes to Chipotle? The price of burrito, right? One day it was 8, 9, 10, 12, 14, 6, like damn, right? But everybody's willing to pay. That's purchasing power. There's certain things in your life, like if Netflix says tomorrow, you know, hey, now it's $20 a month, everybody's canceling. They've already canceled. They don't have the purchasing power. So that's the thing about having active management, Sheila, in a mutual fund, is that the money managers can go in and say, let's sift through all the different companies and invest in the ones that can keep their profit margins high, right? Here's another thing, shouldn't we be making changes? Clients call and ask, what should we do now? That's a natural response from clients. Hey, this big event is taking place. Shouldn't we be doing something? Here's my response. Sometimes we make changes, but in times like this, it's best to do nothing. Right? The market is too volatile. It's too complex for the average person and even the average advisor, and even for a lot of the big time professionals are saying it's a very complex. There's just too many things going on between the war, between inflation, between Federal Reserve. There's just between China being locked down, right? There's just too many things. It's hard to kind of, so sometimes you just do nothing and you want to wait until things kind of settle down. The market works against you in a sense, okay? This is the problem that people make in the market, especially people who manage their own accounts. They say, oh, wow, oil is doing really well. I'm just going to take everything out of these types of stocks and go into energy. But now energy is down 15% in the last week. Or people say, stocks are way too risky. I got to get into bonds. Bonds are down for the year. The market works against you when you trade. Every time you go here, the market goes here. It's very difficult, right, to stay ahead. So you have to be well diversified, and you just have to sit through it. One of the just stupid things I say to my clients is, when's the best time to get off a roller coaster? At the end, right? What happens if you get off in the middle? Yeah. There's really nothing we can do except to wait it out, have patience, okay? Here's another thing. People say, is this 2008 again? Is this 2008 again? Some of you guys are too young to remember, but it was a bad time. There will be many comparisons to previous recessions. That's normal because we look for historical precedents. I will tell you, there are big differences this time, and for the better. In 2008, there were serious systemic breakdowns, credit market banks, financial institutions. That was a whole different ballgame. This time, we're going to see, yes, asset prices will come down because of the new interest rate environment, but we feel corporations and institutions look healthy right now, okay? Nowhere to hide. I'm basically getting in their head. I'm answering all their questions before they ask. They're thinking, man, did he make the right decision? Am I in the right thing? Should I have been over here? And I'm like, nah, there's nowhere to hide. If you look at the chart, they show stocks versus the different types of bonds. They all pretty much look the same in terms of the negative year-to-date returns. There was no good move that someone could have made where they could have avoided this, right? Unless they all go to cash, which, again, if you get out, the next question is, when do you get back in? The market works against you. Recession, yeah, possibly, even I'm saying that, 50-50. But given the health of consumers and corporate balance sheets, that means the amount of money that corporations have sitting on the sideline, the amount of money that people have in their bank accounts. Recession is possible, but it should be short and shallow. So it's not going to be like this, right? Hopefully, what we anticipate will just be like this. What can we look forward to? So there's got to be some optimism, right? What goes up, unfortunately, must come down. COVID, we all saw really huge, outsized returns. But it must come down. But what goes down will eventually come back up. So we're already at the point, right? We're already so low. At this point, we can start to look forward to things coming back up. There may be some more downside in our immediate future, but our economy is stronger than we think. Unemployment is very low. The global economy is still on its way to opening back up. People ask me why I'm always so optimistic. It depends on the time frame that you're asking me about. Am I optimistic this week? No. Am I optimistic for the next month? No. 3 months? Probably not, right? I believe by year end, this is my stupid just projection, which means absolutely nothing. I believe that we'll recover the losses by the end of the year. That's just me. That's just me. Okay. Anybody have any questions about this? So when I go out and about and I tell people that I'm an investment advisor, I help people with retirement, financial services, however you describe yourself, people say, ooh, it's a tough time for you, right? I mean, I stay ahead of issues with my clients. I'm always there for them. I take calls, I help settle their nerves. I make them feel better. I instill confidence. And yesterday morning appointment at 10 a.m. with someone who's leaving their job, 1.2 million in the 401k, right? And so we're going to have a meeting next Tuesday. That's a big one. I have another guy that's retiring from, he's the chief information officer of the Department of Agriculture. He has 2 million in his TSP, right? So, I mean, yeah, this is all going on, but I'm still on my way to getting new business. Trainings like this, guys, this is a great training for you because that's hours and hours and hours of research and reading or whatever that I'm basically compiling into one document where if you took good notes, and of course we'll give this to you guys, and you can just send it out to your clients and say it's you, right? It doesn't matter if you don't think it's going to sound right saying that it's you. You can say it came from our broker, however you want to say it. But use this stuff, internalize it.